Okay, so in this problem, we're going to be doing a bank reconciliation. It's first going to ask us to prepare the bank portion of the reconciliation. So what that is asking is to basically take the account balance that the bank has and reconcile it with what our accounting books have. Okay, so if you look at this bank statement, you have this balance and then you have a bunch of transactions. So there's a deposit, there's some checks that were taken out of our account because when you write a check, that's money subtracted from your balance, while the deposit is money coming into your balance. And then you have some other charges, and then you have this balance at the end. Okay, so this is again for November. So when we start our reconciliation, you can see here that it's for the end of November. So this balance is at the beginning of the month. All these transactions happen during the month, and our ending balance is $370. So what we're doing again in this bank reconciliation is seeing what the bank is saying our ending balance is, in this case 370, and reconciling it with what our accounting book is saying. And in this case, we have a checkbook. So you can see that in our checkbook, it says our balance as of the end of the month is 1,325. But the bank is saying that it's 370. So we're going to try to figure out what is in the bank statement, but not in the checkbook, and then vice versa. What is in the checkbook and not in the bank statement? And after we reconcile those two, we should get the same balance. So this 370 is not correct, and this 1325 is not correct. It's something else because, again, the checkbook is missing some things and the bank statement is missing some things. Okay, so again, what this reconciliation is taking the ending balance of the bank statement and reconciling it with the ending balance of the checkbook. So we don't want to use this 540. This is the beginning balance of the month. We want to start with this ending balance of $370. So we're going to have a balance of $370. Okay, so now what we're going to do is focus on what is in the checkbook, but not in the bank statement. So let's see, let's compare and see what I'm trying to get here. Okay, so you can see, for example, in the checkbook, we have this November 9th deposit, and you can see this deposit is reflected in the bank statement. So this $130 is in there. You can also see check 622, $15 in the checkbook, and you can see it also reflected here in the bank statement. So these two so far are okay. And so if we just keep going down, we can see that 623 and 623 are both here. 624 and 624 are both here, but you can see there's a little asterisk here. So what is it saying? It's saying that this is the correct amount for check 624 because you can see the amounts are different. So even though 624 are both included, the amount we put in our checkbook was only 75, and in the bank it was 115. And what this asterisk is telling us is that one of these is mistaken, and in this case, it's our checkbook that's the mistake. It was actually $115. So maybe we just mistyped or misentered this $75. So we're gonna have to account for that. This is since we made a mistake here, this ending balance is gonna be wrong. So we're gonna have to kind of correct for that. But that's gonna be in the book side because it's a mistake in this particular part. It's a mistake in the checkbook. So then we see 625 also is here. It's the correct amount. But you can see there's some other checks that are not in here. So 626 and 627, they are not yet in the bank statement. They're just checks that you wrote and they are still outstanding. Okay, so we're gonna eventually have to account for that. But what the first part of this reconciliation is this add section. So this is going to include things that we need to add to this $370. So those are deposits. So we saw that this first deposit is $130 in here. but we see that we have this deposit at the end of the month. So this is a real economic reality for our business. We did kind of deposit this, but since it was on the last day of the month, it did not yet appear on this bank statement. So that's why this 370 is lower than it should be, because it should actually include this deposit. So this is something we're going to have to add to the balance. So this is going to be a deposit in transit. So basically, we prepared this deposit. It's entered in our checkbook, but it's not yet hit the bank account yet. So we're going to kind of reconcile that. We're going to pretend as if it is now in the bank. Okay, so that's what this reconciliation is trying to do. And then what are these amounts that we have to take out of the bank? It's going to be these checks that we wrote but are not yet kind of reflected in the bank account statement. Whoever we gave the checks to have not actually cashed the check yet. So it has not come out of our account in the bank. So we're going to have outstanding checks. And we have two outstanding checks, 626 and 627. Okay, so now let's do all the subtotals. So when we add 370 to 1,210, we get 1,580. And then when we add 85 and 265, we get 350. And so now what we're going to do is these are amounts that we're subtracting. So we're going to take this amount, which is basically the unadjusted balance. We added our deposit in transit, and now we're going to subtract this 350, and we're going to get 1320. And so this is our adjusted bank balance. So let's see. Okay. So now let's move on to the book balance. So in the same way, we're going to start with our balance in the checkbook now of 1325. And so we're going to see if there's basically anything to add. In this case, there's nothing to add. It could be that maybe if we got a wire transfer or some deposit just directly to the bank, we would have maybe seen an extra deposit here. Or like a you would see like a bank transfer, an EFT, but we don't see anything added here. So I don't think there's anything to add. Okay, so now what do we have to take out of our checkbook? And okay, so actually one thing, let's just note this. So the fact that this mistake in this check 624, the actual amount was higher here than we wrote in our accounting books. That means to adjust this balance, this should actually be lower by the difference because really if we had put this check at $115 as it should be, it would have basically reduced this balance of 625 by the difference, which is $40. So really, this 1325 would also have been lower by $40. So we need to basically adjust that. So let's kind of make that our first adjustment. Basically, it was a correction of a book error. Again, this is an error in our checkbook here, $40, and it's a subtraction. That's why it's in this less column. If it had been the other way around and this $75 was correct, we would have had to do that adjustment in the bank part of it, and it would have been uh, basically if this had been 75 and the actual amount was 115, we would have had to add to the bank balance. But in this case, since the error is in the book side and it was a lower amount, we're gonna have to, or sorry, the check was actually a larger amount. We're gonna have to correct the book by reducing the balance a little bit by that difference of $40. And then we also had these charges. So these charges, are just directly taken out by the bank and they never appeared in our checkbook. So we need to now change this balance to reflect these actual charges because these are real amounts that were taken out of our bank balance and is going to reduce kind of our cash. So we need to reconcile our books to that amount. So when you add these up, total is $95. And so now we're going to take 1325 minus all these subtractions to get. So you can see here that this amount and this amount are the same. And they're both different, right? The book balance changed and the bank balance changed because of these corrections. But they all basically, when we did the corrections, they all ended up in the same place, right? The book and the bank are now reconciled, which is the goal of this whole process. Okay, so it's asking us how much cash do we have? And we can see here now this balance is reconciled. So we know it is 1230. Okay, so now we're going to do the journal entries because basically we're saying in this book part of the reconciliation that these particular items are not yet in our accounting books. All the things in the bank side are already in our accounting books. This deposit was already in our accounting books. These checks have already kind of hit the accounting books. So nothing on the bank portion of the reconciliation needs a journal entry. It's just these items in the book side that will need to now be entered into the accounting books to get it basically matched up with what's in the bank. So the first one is a entry to correct an error. Okay, so you can see here that this error of check 624 was for utilities. So the actual utility expense was understated, right? When we made this utility check, we would have debited utilities expense and then credited cash $75. But we actually needed to have debited utilities $115. So we actually need to basically add the difference of 40. Okay, so now we would basically have seen the original $75 debit when we kind of wrote this check, and then now we're debiting $40 more. So it will now, when we add 75 to 40, we get this total 115, which is the correct amount. And they're both, since these were both debited because utilities expense is a debit account, you're gonna have a debit balance and utilities expense of $115, which is what we want. Okay, so now the check charge. So we're basically going to have some expense. So we're going to call it bank expense. That may be the most appropriate one. And it was $35. And cash is always going to be in these reconciliation entries, one of the accounts. So, because again, we're trying to get our cash balance as per our accounting books to be correct. And so we, again, have to actually include these amounts of cash that were actually taken from our bank to get the cash balance to be correct in our accounting books. And then finally, the service charge. And we'll just hit bank expense again. That seemed like the best one. It was $20 we see here. And again, cash. Okay, so just to be clear about what we just did, we basically had this from our checkbook. This was the balance that was kind of the unadjusted amount. And then we did some journal entries. And you can see here, basically, we have three debits, $40, $35, and $20. And then we have credits to cash of 40, 35, and 20. So if we just put these in here, 40, 35, 20, and again, I'm just posting the credits that went to our cash account, we're going to end up with this adjusted balance that we want. So now we have adjusted our accounting books to reflect how much cash we actually have.